So welcome to an episode of Cleanweb TV. My name is Woon Tan, and with me today I've got Matt Golden. Matt, you're the CEO of OpenEEMeter, Open Energy Efficiency Meter. You're also the lead for Environmental Defense Fund's Investor Confidence Project. And in your previous life, you've been a founder of Recurve Inc., which is a tablet-based energy analytics software for the home performance industry based on your experience as an energy audit consultant and doing energy retrofits. Welcome to the show, and it's a pleasure to be invited here at your house here in Sausalito, California.
Yeah, welcome.
I met you at the Paris conference for the Energy Unlocked launch, and so we got chatting, and I was really curious. So let's jump in straight into OpenEEMeter. What does it do?
So energy efficiency is a strange commodity. It's something that doesn't actually exist. We're measuring the difference between what would have been and what is after some sort of intervention has taken place. And so the OpenEEMeter takes advantage of the fact that we finally have access to energy data in the form in the U.S. of something called Green Button and Green Button Connect, which gives us the ability to get interval data from the utility on customers' performance, energy use. And we've also standardized data feeds in terms of all of the data coming out of the field from people auditing houses and doing retrofits. And because we have access to this data, we can now quantify energy efficiency in a way that we've never been able to before. And we're even coming up with a new word for it, which is a bit of a problem considering energy efficiency is actually in the name of the OpenEEMeter, but we're calling it demand capacity.
Okay.
And what this means is that it's not just base load energy efficiency, it's actually load shape, so it includes time and locational data. And when you start to understand efficiency in that light, and you start to look at it also in the form of a portfolio, not individual buildings, you get very high confidence intervals that that the savings are real. And it starts to look a lot like capacity, and so it can become something that plays into distributed energy resource markets that are emerging right next to storage and demand response and solar and grid infrastructure and all these other grid services that are coming into play. And now energy efficiency is not, a program or a logo on the side of your TV set that says this Energy Star. It's actually something that folks in utility procurement can look at as another form of capacity or another resource that they can bring to bear to manage the distributed new grid that's emerging. And it really is, in California, a totally new world right now. We're experiencing negative energy costs on an almost daily basis. And so it's a whole new set of rules.
So it's really interesting from a sort of market point of view, because it means that it's you're sort of advancing the market because it's you're able to quantify the value of energy efficiencies in a standardized approach. That means there's a lot of benefits that is unlocked.
Yeah, we're really establishing a market for the first time. We talk about markets in kind of this general sense.
Yeah.
We're going to do market transformation, but fundamentally a market is two or more parties trading on a product and a price.
Yeah.
And efficiency, we haven't had an actual product.
Okay.
We haven't agreed on what it is. And so this is really, and this really speaks to why it has to be open and transparent and ubiquitous and automatic and replicable, is that we're really establishing a weights and measures. I mean, this is like the bushel of corn for energy efficiency,
right,
or the kilogram or the kilowatt hour or the BTU. And it's a calculated value. It's a derivative. So everyone needs to understand it. It needs to be transparent. And measurement has to be something that really all players in the market can reliably account for. And so for the first time, what the OpenEEMeter does is it creates that weights and measures, and it allows we've been in this world, frankly, where no one really knows what's going on. It's all, we do white papers and studies, and then they do rebate programs and cross their fingers, and a bunch of people run out and install equipment. And the folks that are actually running the programs don't have a full understanding of what's happening, and the contractors and the product manufacturers have almost no data about what's really going on in the field and what the real outcomes are. And so the big revolution that we're about to see, there's a lot of market changes that are going to happen, but fundamentally we're going from a world where pretty much nobody has any clear idea the results of what they're doing is actually delivering. And really in the next couple of years, we're going to move into this world, especially in residential and small, medium business, where you have really a lot of data emerging quickly. And I'll talk about the differences between commercial and but fundamentally residential. When you look at residential, and particularly in California, we have just a tremendous amount of data emerging. And the big evolution is going to be, we're going to go from this world where really folks don't actually have the data to understand what's happening, having all the data one needs in a standard way to actually figure out what's going on. And that's really going to be the basis. That's really the basis for all the innovation that's about to happen, is that ability to actually know what's happening. And, it's not just the data, but it's the knowledge that's going to come from it.
Yeah, so just let me sort of quote what you sort of say in one of your articles in Green Tech Media. You say that the frequently used analogy of energy efficiency being low-hanging fruit is misleading. If energy efficiency were in fact easy to pick like a ripe apple on a low branch, after 40 years of programs, more of it would have been picked instead. If it is much more like wild strawberries, it takes a lot of people on their hands and knees a long time to fill a basket.
Right. It's a lot of little things and a lot of little places, and that really speaks to this evolution. It's such a complicated market that's emerging, especially because it's not just about saving energy, it's about knowing when and where to save energy. Save energy in California at 2:30 in the afternoon in a lot of locations, it costs everybody money.
Yeah.
Right? We literally have a negative cost of energy. So it's such a complex problem. You can't solve it through a white paper and through hiring consultants in a conference room. It's really that the messiness of the market is actually where the real solutions are going to emerge. And it is going to take lots of different business models, reaching lots of different customers with tons of different technologies. And right now this is the heart of Silicon Valley, and we have all this massive innovation happening, and most of it can't reach the market because of the regulations involved, right? The amount of white papers involved and to get an actual program running. And so here we are in the heart of innovation, and most of that innovation is sidelined. And what we're hoping this will achieve, and frankly, we have the participation of the PG&E, one of the largest utilities in the entire country, and regulators, and now state law has changed to enable this transition, is to say, look, we're not going to try to figure out the solution anymore. What we're going to do is create a marketplace that values the results, really not some abstract way, but as a real resource where it's competing with other resources in the market.
Right.
And let the solutions emerge out of that.
So for me, what's really exciting is the sort of, it's almost a Cleanweb approach to energy efficiency, because with a platform, you're actually creating a market where you could enable the sort of changes through what a platform is really good at, which is to standardize and to sort of create sort of aggregation and slicing or dicing of energy efficiency in terms of the value it creates or how it's being done. But also at the same time, you're encouraging and you're allowing the innovations to happen by the sort of local approach that innovators are best at. The sort of and at the same time, the investors could sort of then come in and track and value the impact that you actually, or the investors or the sort of players that are in this market could actually are claiming to sort of result in.
Right. And that's actually, there's many different facets to it, but a big one is opening up the marketplace to innovation. And that, fundamentally it's about rewarding the right outcomes, getting away from, whether it's an app or a better furnace or insulation, or you trained your construction crews, or you taught a homeowner to close the window before they run their air conditioner. Whatever that is, that's where the innovation is going to happen. And frankly, however you take all of that and package it into something people really want to buy, that's the business model. That's no longer the program. The public sector side is saying, well, there's a value to the carbon. Frankly, there's a direct value, and we would have had to build a power plant.
Yeah.
But if we invest in this cheaper resource, we don't have to build a power plant. We don't have to replace all these transformers on these poles behind me.
Because energy efficiency is one of the lowest cost as well as the sort of cleanest form of
it tends to be extremely low cost. It also provides a host of other benefits, right? So it's and frankly that's been crippling it in these programs, especially in California. We look at the total cost of a project when maybe 80% of the reason people are doing it is because they want a warm house, not to save energy. And so the good news is that residential energy efficiency is about $40 billion a year in the U.S. Just most of that stuff, they don't know they're doing efficiency, which means they're not getting the benefits. But also, there's no incentive alignment, which means you don't make more money by saving more. The customer might save a little more down the road, but the businesses don't really have a direct incentive. And what we're riding here, and the real promise in California, especially with this initial pilots that PG&E's talked about and that we're hoping to move forward next year, that have also embodied in kind of this SB 350 and AB 802, which are two laws that passed recently in the state that really changed a number of the rules, is to say, to take energy efficiency and transition it from a rebate that you get up front And if you get paid in advance, you're going to get regulated. There's just no two ways around it. You've just misaligned incentives. Like no other market in the world that you can. I mean, try to think of a place where you do an engineering model, right, an Excel spreadsheet or something, and you say, all right, I think I'm going to grow, 1,000 bushels of alfalfa, and someone writes you a check.
Yeah.
Probably wouldn't fertilize or water, right? And so what we want to do is take energy efficiency and move it out of these kind of false, fake constructs, proxies, and turn it into a real market where you get paid for the actual results of your work at its true value over time, like any other, like your solar plant, right? You sign a PPA, you get paid for what you deliver. You don't get paid in advance. And that aligns the incentives. It also turns, and so now you don't have to regulate because, you have to regulate health and safety and make sure the market, no one's cheating, that stuff you see in every market, but you don't have to regulate every step in the process.
It's almost like bringing efficiency to the energy efficiency market.
Yeah, establishing that marketplace.
Yeah.
And it also turns it into a cash flow,
Yeah.
right? And so we talk about project finance and energy efficiency a lot. We use those words, and what we really mean, we're really saying we're financing projects. Project finance is actually a different beast. So project finance, which is what you'd use to build a power plant, is actually financing cash flows, not financing the project.
Yeah, so it's sort of discounting the cash flows and then sort of
and that's
pricing the uncertainty into it.
Exactly. And so we're taking efficiency out of this like upfront rebate and saying, no, now at a portfolio level, you're getting paid for your results over time. That's creating this long-term cash flow. And it turns out energy efficiency at a portfolio level is very, very reliable. On an individual building, there's a diminishing return on engineering. You can only be so right.
Yeah.
You can't, I buy a new hot tub or something, right? You can't afford, maybe for commercial buildings, and this is where some of the differences lie. In residential, you can't go out and say, oh, your bills went up. Did you buy some new TVs? Do you have a baby? What'd you do? So, but at a portfolio level, you get these very smooth standard deviation curves. If you get projects that are similar bundled together, you get very consistent, very reliable returns. And so you end up with, if you have a utility as a counterparty, buying your savings, and you've got this portfolio of a few hundred residential buildings that did some similar stuff, you have a very, very highly probable outcome and a very probable long-term cash flow that you can then finance with private money to basically to use that money to reduce upfront costs, build better products for customers, make this industry lucrative enough to invest in. I mean, that's one of the big problems we have in efficiency is that in the regulated world, the regulator's job is they're trying to squeeze the margin out. What that results in is essentially a business model that's not profitable enough. If you look at the money that any of the solar companies are losing every quarter, I don't want to use that as a model exactly, but if you're going to grow a business, you have to invest in it, and you have to have returns that actually make sense out the other side.
Yeah.
And we're just not there in efficiency.
So Matt, so we're talking about the whole sort of the energy efficiency market space being sort of homogenized because of what you're creating now, and you talk about how because the data is available, you can actually make predictions a lot more accurately, which then helps investment and sort of tracking of how the sort of returns are sort of flowing back. So how do you explain this sort of openness in terms of the data? Like, because I know there are sort of changes in standards of data that's happening that's allowing your platform to be
right.
sort of
So one of the distinctions, honestly, is between open data and kind of an open system.
Okay.
And inherently, the system we're creating actually is not open data in the sense that every actor, whether it's some sort of provider that's going out and doing retrofits, or a utility or a finance company, actually they own their own data.
Yeah.
So the openness is the fact that the platform, the data standards, and the calculations being performed are all transparent. Open.
Yeah.
On GitHub, open source, under an MIT license, which is a very lenient software license, allows people to use it for whatever they want, frankly. We love open data, fundamentally, but it actually would be a deterrent, right? So if in a finance business, one's data is the business, right?
Exactly,
so if we want people to invest in business models, and frankly, we get this quite a bit in public sector, where it's just this, everything should be open. Well, not entirely, right? If the result of your business model is your data, and I've been on this end at Recurve, we had a lot of data. And at one point, I think the Energy Star program said, "Hey, you got to give us all this data, or we're not going to use you can't use the logo anymore." And frankly, our response was, "All right, well, we won't use the logo anymore because this is our data. We're not sharing it that way." So there's this groovy factor of making it all open and public. That's not really what it's about fundamentally. Though we'd like to see, we facilitate that being an outcome.
Yeah.
We'd like to see more data being, at least at an aggregate level, open. Now, in terms of the standards, everything's always evolving, but we've hit a few benchmarks recently, which we can build on. Which one is Green Button,
Okay. Yeah.
which is a standard for really designed around electric utility rates and utility data. Now implementing gas as well. It's pretty ubiquitous. Again, throughout California, PG&E has something now called Share My Data, which allows us to have a customer authorize through a web interface and basically give us an API, and we're able to pull and get interval data, so hourly gas, and starting hopefully January 4th, hourly electric, and January 4th of 2016, we'll be able to get daily gas,
Right.
which is a lot of granularity. And then on the project data side, there's really two pieces that are sort of integrated. One is called Home Performance XML, which is something I've been working on for like a decade now. Is actually some of its origins were stuff that just spat out of the software I was writing back in the day. And HPXML, Home Performance XML, has been adopted in California, in New York, Arizona, and a bunch of other states. It's kind of an interoperable data structure. So there's all sorts of tools that contractors are using in the markets to make predictions, which is really a form of underwriting,
Yeah.
right? For savings, and gather data about buildings and ECMs. And now out of all those different tools comes a standard package of XML that can be uploaded into the OpenEEMeter or
Right.
a finance company's underwriting software, et cetera.
Yeah.
It'll evolve. And then in the commercial side, we have something that actually also sort of incorporates HPXML called the Building Energy Data Exchange Specification, BEADS, which is a DOE data set, or XML and standard and schema. It's really more focused on commercial, kind of incorporates HPXML into it. And so we're kind of, that's the data spec, and they're evolving constantly. Like every state that implements HPXML, there's all sorts of changes we have to make every single time.
Yeah.
But but compared to where we've been, we're in a fantastic place from a data standpoint.
So am I right in thinking that because of the openness in the open standards that's sort of around it, it means that it can be used in any energy markets in the world?
Yeah, I mean, there's nothing special geographically about energy efficiency, and so, and this also speaks to the investor confidence project we talked about, where frankly there are more differences. Frankly.
Okay,
but a project is a project. You have to baseline energy consumption. You're going to make some sort of estimate of savings. It has to be implemented, operated, and measured at the end, and that's ubiquitous. It frankly doesn't matter what continent you're on.
Yeah,
those are the steps in the process, and when we're calculating energy savings, this is stats and math. It's not. It's really so.
It's universal.
Yeah, and we actually have an ANSI process up and running, which is in the consensus standard setting process, which is bringing everyone together and saying, look, there isn't really any being better at this, because there's a bunch of proprietary vendors that have kind of initially tried to stake their claim of like, we have the best calculation method. Well, there is no best, because there is no right answer in energy efficiency. It's just getting all the stakeholders around the table to agree.
Yeah.
And then get more, and then refine that answer. But the critical piece is that we all have to get the same answer. Because right now, if you were to give 100 residential buildings to 5 different engineers, you're going to get somewhere on the order of 7 to 9 answers, and they're all going to be right. That's the problem. And so really, this is a derivative. It's a calculated value, and we need to agree on the methods. And it's not really, honestly, that hard to do, because it's kind of, there's all these little decisions baked into how you calculate the savings. Like, how do you pick a weather station? As a good example, how do you calculate a weather norm? And there's different methods, and you can have a robust discussion, but you have to then decide, and you and I have to use the same method, or we get in trouble. And so that's really what the OpenEEMeter is kind of forcing, is this agreement.
Yeah.
And frankly, in the U.S., we spend well over $200 million. Some might even say more like $400 million, but at least $200 million a year on EM&V reports. And so, instead of having a replicable meter that's transparent, what we have is a bunch of really big consulting companies running around writing the same report for 50 different PUCs over and over and over again at huge expense. But not just the cost, the uncertainty it creates in the market is untenable. So if you're out actually trying to generate energy savings, but you don't know how much you saved until 4 years later.
That's where the sort of misalignment in
it's not.
incentives.
So it's a misalignment, but also you don't know what you saved until some consulting company comes in and they do some phone polls and a bunch of what feels like black magic, and and so that's not something that's easily bet upon, right? Like that, the uncertainty of not knowing what that's going to be, it means that Now you're uncertain what your product is, and even if you have a certain price, good luck.
Yeah.
And frankly, there's a long history that you can see of these reports coming back and taking half the savings away, and we want to iron that out. If we want this market to exist, we have to agree what is an energy unit of savings. It has to be something you can calculate. Everyone gets the same answer, combined with a PPA with a firm price by an investment grade entity, and that gives you this long-term cash flow. And frankly, it doesn't mean some of the EM&V we are doing currently is invalid.
Right.
It's just not part of a meter, right? So a meter is automatic and replicable. And if we're going to bet on a derivative, we have to have that calculation right there and say that's the calculation we're all using. And what we've been doing is baking a lot of stuff in there, which should be pricing. And so I'm trying to say it's really it's not the M&V is not the problem. It's the E, the evaluation piece.
Right. So in a way, you're allowing the sort of you're sort of internalizing these aspects that are not part of the market at the moment.
Yeah. So what I want to do is take the evaluation piece and I want to focus on the root of evaluation, which is valuation.
Okay.
Right. And so this is going to be a little bit weedy for potentially some of the audience, but one of the big concerns is something called free ridership. Do I give you a rebate and you were about to install that furnace anyways, and then I wasted my rebate, which is kind of how like a Bed Bath & Beyond in the U.S. sends out coupons. It's how you think of a coupon. Like, did my coupon work? Well, if you were going to go buy bed sheets in advance and I sent you a coupon and now you get 20% off, I just wasted that money, right? But it's really not appropriate for a market fundamentally. So it's really just kind of a come out of where we've been and this past kind of odd structure that we've had for energy efficiency. So free ridership is a good example. So if you're giving out coupons, that's how you think of free ridership. You just wasted your coupon. But if you're procuring a resource and 20% of the people were going to do it anyways, what that really means is 20% of the savings that you're measuring were already in your baseline, which means that you need to
double counting.
Right, it means you have to procure more to have the same effect. And if it's all about just getting electrons, it means you increase your procurement. It doesn't mean you discount your measurement by 20%, if that makes sense. And so we're kind of separating things, and we're building that into pricing. And so the utilities need to figure out how reliable is energy efficiency, what actual change is going to be there that wasn't already in their their forecasts that they already are using, and build that into the price, not into how you measure.
Right. Yeah.
And so that you get this consistent long-term cash flow, and you're not subjecting the markets to uncertainty.
So let's
Good
jump.
luck editing that one. little dive into EM&V.
Let's jump into the sort of the commercial side of things. So you're part of the Investor Confidence Project,
right?
And what does it do?
So the Environmental Defense Fund, it's an NGO, global, primarily here in the U.S., also in China, and now more and more in Europe. And the Investor Confidence Project we're pretty heavily engaged here in the U.S., particularly in California, Texas, New York, Connecticut, and New Jersey, but other states as well. We're also running we got a European Horizon 2020 European Commission grant. We're also running a parallel project in 6 countries in Europe, and it's very similar, frankly, to the OpenEEMeter approach, but it's focused on large buildings, commercial multifamily buildings, and it's really the difference between large volumes of data. So I was kind of started talking about this, but in California we have something called the Property Assessed Clean Energy, PACE, which this year will do about $500 million in residential energy efficiency, and so that's like 35,000 projects. Those are big numbers. It's still not big numbers, but big enough to get high confidence interval portfolios out of. And that's frankly in California. That's the freight train we're riding, right? Commercial is not like that. We have relatively small numbers. In California, I don't even know what the total is on commercial, but it's a fraction of what we're seeing in residential. And the projects and the buildings are all very different. Yeah. Hard to know what you're looking at in the first place. Hard to underwrite. Very unique, and a lot of risk. So you end up taking a different approach, and this is which is. You have to manage risk on each building. You can't just wash it out with large numbers. And frankly, you just need a way to tell what it is you're looking at. And so what the Investor Confidence Project is working on, and what we've accomplished is taking kind of all of the complexity and all of the loads of different standards that go into one specific project, from how you baseline to how you calculate your savings, and you have BEPA and ASHRAE 14 and commissioning standards and O&M standards and IPMVP for measurement and verification at the end, and there are all these different standards that can be applied in different ways. And so what we've done is taken those and assembled them into standard projects. So what we call targeted standard and large projects for commercial multifamily buildings. Single measure to whole building deep retrofits. And then we've constructed a system where you can actually take a project and follow the protocols, put together standard documentation, which is being mapped now into this BEAD spec. So soon we'll have standard data. Right? This is we're a few steps behind in Resi, frankly. Everyone looks at the big stuff and they're like, oh, let's go hunt elephants. But frankly, the little stuff is where it's at potentially, especially in the near term. So we're standardizing the data. And then we have a system for third-party, like independent engineering validation of the project, and then you can certify it as something called investor ready. And what that means, investor ready energy efficiency means that this is a standard project that has, from your insurance experience and from an asset class as well, you followed a set of standard underwriting procedures. They're complicated, but they're standard. You have a standard documentation package, and you've had a third party check it and sign off on it. And now you have a standard asset. And so it plays in a couple different ways. If you're a building owner trying to figure out if this vendor trying to sell you something is somebody you should trust, this helps establish that trust. If you're a finance company, insurance provider, a utility, trying to put money into a project, you scratch your head saying, how do I know if this is a good project? This is a way to do that. And then it creates that, so it reduces transaction costs in individual projects getting funded, but it's still one by one. But it also then creates the framework so as we get bigger numbers, you can start to package them together and securitize them. And we're building the back end of this and we're just at the beginning of this, of really getting data. Whereas again, in residential, we have a lot of data, which is once you have that asset class, then the trade for certification is to start to get actuarial data on the performance of these projects. So we can start to establish that, large commercial projects that have been certified to have followed, investor confidence project, large commercial version 1.2 protocols has this kind of performance in terms of compared to its prediction and also just in gross terms, and then that becomes the basis to underwrite at a portfolio level. But it's going to take some time. We just started collecting the data in a way that's actually usable.
Yeah, so
and there's no way to hurry that, right? We need seasoned data.
Yeah.
And everyone wants it yesterday, but it's going to take time.
Ooh.
Local wildlife.
So yeah, Matt. Let's sort of let's try and wrap it up. And so if so we are here at the end of 2015. So if we put ourselves forward and say it's imagine we're at in the year 2021. Looking back in the last 5 years, where would you say OpenEEMeter is?
So, frankly, with the OpenEEMeter and the Investor Confidence Project, I think it's going to be really boring. It's going to be ubiquitous, right? It's going to be just standard infrastructure that's not very interesting at all. And that's actually, we joke about it in the Investor Confidence Project in particular, that success is really a function of this stuff becoming boring again, right? Like
Right.
This is all infrastructure stuff. Like the real exciting innovation is going to be what happens on top of it.
Yeah.
And so right now we're experiencing this real paradigm shift in the structure of energy efficiency from rebates and programs and this kind of general concept of efficiency to markets where efficiencies are an actual resource, and we have large-scale private investment, and we go from this really, we spend $7 billion nationwide. It seems like a big number, but not at all compared to the trillions we have to spend.
Exactly.
Right? So to be honest, I'm hopeful that this stuff becomes kind of ubiquitous infrastructure, and not all that interesting. And the real stuff we're talking about is like all of the super innovative business models that get built on top of it. And that's actually what makes me confident in both the Investor Commerce Project and the OpenEEMeter, is that we're two things really. First, we're not sitting here saying we have the solution for customers. I have plenty of ideas about what I think solutions look like and would like to test someday and whatnot, and I've been in the market, but we're establishing a market platform that says if your idea works, you get paid and you win.
Exactly.
Right?
Yeah.
And so anybody that has the solution, frankly, there's no such thing as a solution anyways, but they're selling you something. Right? And so we're saying, look, there's a pretty hard line. There's the platform that values and pays for the results, and then there's market solutions. We'll see where those go. So that's one thing that makes me confident, is that we're not proposing that we have the solution. And the other piece is that we're taking energy efficiency, and the way we've been doing it, we're all in the efficiency market, we're just so accustomed to it. It seems like the way everybody does everything, but it's really strange and unique. Like you can't find other markets that look like energy efficiency. And it's just really where it came from, frankly. Like if you know the history of it, which I won't bore everybody with. But the other piece that is kind of exciting that I think is that it just looks like every other market, right? Like it has all the same job titles.
Yeah.
It's structured the same way. I mean, it's pretty much how you finance everything, from a power plant to, your car loan. It's all the, people worry it's very complicated. And, especially in efficiency, there's all these new terms and ideas, and it's like, walk to the financial district, talk to a banker. They'll understand it, and they do, right? And that's the big innovation, is that it's actually really this is how so many other businesses already work. And, if you go and you go to a car dealer and you go to buy a car, and they offer you a low interest rate car loan, and the salesperson selling it to you, and like behind that is the same system.
Yeah.
You don't know it. Go get a cell phone. Behind that, it's the same system basically. And so we're not really inventing anything new. And that's true for both the investor conference and the OpenEEMeter. It's really bringing a lot of the same ideas that make other markets work to the table for energy efficiency.
Right. Thank you very much, Matt. It's been a pleasure chatting with you and understanding what OpenEEMeter and the Investor Confidence Project is all about. And thank you very much.
Thank you.
Thank you.
All right.
Yeah.
Cool.
Thank you for listening to the Cleanweb Conversations podcast. Are you interested to learn more about the Cleanweb movement? Head over to cleanweb.tv. That's cleanweb.tv.